Now to discuss retirement planning for you. Let's look at long-term. Meagan Phelps is with us, CFP founder, Empress Investment Group. Thank you so much for being with us. So, I mean, are the clients nervous? I mean, you could say, oh, we're diversified, but you can't feel great even if you're diversified with this kind of market.
Nobody feels great with this type of market. You're absolutely right. If you have pulse, you have money in the market and you're checking your account balances, you often are not feeling great right about now. However, most of our clients are staying level-headed. They do realize that over the past 2 years, there's been, for the most part, phenomenal run-up in equity markets. And they realize that this is par for the course. You have to be willing to weather some storms in order to participate in those gains long term. So thankfully, most are staying very calm.
And so when you talk to them, I mean, if you're long term, obviously you're in a better situation, right? I mean, you do dollar cost averaging, you have a long time horizon, you could even rebalance pretty often. How often are you rebalancing or taking some profits off the table for certain areas?
Depends on the client, and you're absolutely right. Long term is critical. We find that a lot of people, because they saw day trading happening, I think more than we ever saw in terms of the retail investors, they became accustomed to thinking they could kind of time things. As your prior guest said, that's exceptionally difficult to time when to get in, when to get out. So just retraining people to really think about what are your returns over the 3, 5, 7, 10-year periods? What are your objectives? What's your risk tolerance? Not focusing on what the market's doing May of 2022 when your retirement is still 15 years out. So yes, focusing on long term. In terms of risk, that is another area that we love to focus on. People should understand what the potential drawdown is in their accounts. The worst time to learn you have too much risk is in the midst of a market correction, and you might have to defer retiring in that case, or go back to work, or change your spending habits. So really focusing on the level of risk in your portfolio and making sure that tweaks don't need to be made there. And in terms of time horizon, I think you mentioned something great, dollar cost averaging. So we believe there's really 3 different camps here. The people who are a long ways out to retirement, we're talking 3, 5 years plus, and those people are in the accumulation phase. So they should be focused on maximizing growth within their risk levels that they're comfortable with. Dollar cost averaging, funding accounts, retirement accounts through employer or outside of employer, and really maybe taking advantage of a lot of the growth opportunities out there right now. When I say, NASDAQ's down over 20%, if you have retirement plans for 10 years from now, looking at what are some good names you can get into that have strong balance sheets and are profitable. Middle term would be people who are going to retire. Yeah, middle term are going to be people who are going to retire in the next, say, 2 years. And in the next 2 years, you want to really make sure you have a plan that shows the sustainability of your wealth over time, and making sure that you don't have money subject to market volatility if you are going to, say, retire in 6 months, right? You want to have a separate investment account that you're going to be drawing from. And then lastly, people who are, of course, retired. And if you're on a fixed income, I think the conversation with our clients really becomes, how much of that income do you want guaranteed? Of course, you want to make sure it's consistent. Some people want all of their income coming from guaranteed sources, such as Social Security, pensions, if you're lucky enough to have one, or alternatively annuities, which can provide reoccurring income to you that you can't outlive. On the flip side, clients oftentimes want to have still a lot of growth in retirement. So kind of managing that risk in the long term makes a lot of sense.
Meagan, thank you so much. Meagan Phelps, CFP, founder, Empress Investment Group. Thank you, Meagan.